Well, as we mentioned, Venezuela isn't the only country dealing with ghost cities. Eric Zwick, Associate Professor of Finance at the University of Chicago, joins us now to discuss more on this worrying topic. Welcome to the show.
Thank you very much for having me.
So walk us through the economic process of how a region becomes a ghost town or a city in the first place.
The fundamental issue is an imbalance between supply and demand. You have sort of too much real estate there, too vacant homes, too much that's either been recently built or that was occupied before where people have left. Once people leave, you have not enough demand, but the houses are still there. So those vacancies then persist.
So talk about the domino effect. Once we have this crisis in the housing market, how do other things kind of follow along during recessions?
Well, it sort of depends on the local market and how the ownership of that vacant real estate is structured. So in the US, where we had overbuilding in several cities, that was heavily debt financed. So there was a lot of loans coming due. When the people were no longer owning the homes and willing to pay those loans, then they defaulted. And those defaults then spread to the financial system and spilled over elsewhere.
And speaking of those other areas, once you see some of these housing issues come up with the recession, talk about how that affects the other economic sectors.
Yeah, so it's not just the construction sector. Of course, there are a lot of services that are connected to real estate. You can think realtors, you can think people who sell furniture, services like mortgage lending and all the folks in the financial sector there. There's also just the fact that if prices are falling, then people's wealth, those who are still in the city, they feel poorer, and so they consume less. So that spills over to the non-service sector, to restaurants, et cetera. So it's kind of a small section of the economy, but it's connected to a lot of other parts of the economy.
Now, we know that China is also a country that's known for its ghost towns, but it's a very different situation there that's not actually linked to recession. Talk about how that situation developed and any other sort of risks you see, for example, with some of these ghost factories.
Yeah, so I think in China, it's an interesting question. You have a lot of building in anticipation of future demand, sort of growth and urbanization out 5, 10, 15 years. As long as that demand comes before, say, the loans come due, then it's okay for those places to be vacant. But if there are loans that are coming due, either in the development sector, in the construction sector, then there'll need to be a restructuring if the demand doesn't show up.
So what about the governments themselves? How have they responded to this phenomenon in different countries?
So you can respond on the final demand side, thinking about things like restructuring debt among families that have mortgages. You can also think about tax incentives that draw, say, first-time home buyers into the market from the future. You can also think about debt renegotiation a little bit further up the supply chain, thinking about either the financial sector, which is exposed, or the development companies, which might have loans that are secured by real estate. But when prices fall, then maybe those loans need to be renegotiated. Those financial spillovers are very costly, so managing that process is quite important.
And speaking of these companies, we know that these infrastructure projects are often years in the making with investments from everyday investors as well as these large corporations. So how much does stalled development and construction further hurt an economy that's already in a recession?
Yeah, so the issue is, of course, with these long-lived projects, if you build a lot now, you don't need as much in the future. So there's some just amount of slack that needs to be worked off over time. I think the key to focus on is these spillovers that are generated through, especially when there's debt involved, because a bank that has losses on one side of its balance sheet might restrict lending elsewhere, and then that can generate spillovers and amplification of slowdown in growth, even if not a recession, that affects other parts of the economy. That's what happened in the United States.
Now let's also look at the so-called fourth industrial revolution. We know that that's meant to streamline and change the workforce even more than it already does. And we saw what happened when a lot of mining companies and other traditional industries that people used to work in ended up fading away. So how prepared are cities now to deal with these new consequences that come with the fourth industrial revolution?
Yeah, I think it's a great question. And I mean, for the housing market, the question is whether it leads to a lot of jobs in the places where there's been building in anticipation of future growth, or whether it reallocates activity to other parts of the country. And then, the real estate sector will have to adjust to that. And you could have a situation where you have sort of apartments in the wrong place in response to the new economy.
So to try and give a little bit of hope, are there any success stories of some of these major ghost cities that were able to successfully revive their economies? And what did they do to bring investment back?
Yeah, so I think areas where you do have fundamental opportunities. So to take an example from the United States, Las Vegas had a ton of overbuilding in the mid 2000s, but there was still enough demand growth over time such that that inventory was worked down over time, and the city is growing and doing much better now than it was 10 years ago when really it was the epicenter of the recession. So there is opportunity for recovery where kind of the fundamental drivers are there. It's just a matter of time to adjust.
All right, Eric Zwick there from the University of Chicago. Thank you so much.